Hey guys, Dave Keller here with Market Misbehavior in informal garb today. Just got back from a bike ride after the close and was inspired to record something for you. I was actually asked something recently about financial media. Came up in a comment to something I posted on social media, and what someone said, and it was echoed by some of the other comments, was that financial media is just a waste of time. You should never pay attention to financial media because all it is just people talking, and there's not much to it. What I'm going to tell you is why financial media can be a problem and how it actually could be a valuable part of your process. So here's a problem. I think with financial media, along with a lot of other things like news, social media, a lot of, broadly speaking, most things on the internet, it's people tend to be lazy. They don't tend to have a good deliberate reason or method of using what they're reading. It's sort of following clickbaity sort of headlines and things that draw you in, stories, narratives that draw you in. And as a result, you're consuming things. And the problem is with most social media, especially, as well as websites that you might be looking at, it creates a feedback loop, right? So if you follow certain people that have a certain point of view, all of your social media accounts are going to, over time, become more narrow and narrow, echoing the types of points of view and the types of analytical tools that you're flagging, that you're liking, or that you're putting the thumbs up on. And so what happens is your focus becomes more narrow and narrow. Your worldview will, of course, become more narrow and narrow in terms of what you're consuming, and that's not great as an investor. What I found. The investors that I find valuable or that I respect, people like Charlie Munger, talk about multidisciplinary approaches and being open to different points of view and understanding how others are wired, and that's great benefit to that. I think that's right. The comment in particular that I read on one of the videos that I had posted was saying that all financial media is a waste of time. You should turn it off or just mute it because it doesn't really help your process. And what I found again is if you are not deliberate with it, if you are lazy about it and you just kind of have something on, it's the same sort of challenge of just having most sorts of TV on. It's not really helping you. It's not challenging you. It's not encouraging you to develop yourself or to grow. You might occasionally accidentally see something of value, but it's not a great way to go and spend your time just having the TV on for hours, randomly going to whatever channel is on and just seeing what comes up with it. That's kind of what a lot of people do with certain financial media. Just sort of leave it on and wait to hear something that catches your ear. The problem is what they are going to do as financial media outlets is try to create things that catch your ear to draw you in and let you pay attention to it and think that it's worthwhile. Now, I'm saying this from the experience of running a show on a financial media outlet and appearing on a lot of financial interviews and around the industry, and so I've seen how the process has worked, and I'm pretty familiar with the goals of all the different outlets. So here's what I would tell you. I think financial media actually does have a point and it does have a purpose, and it should be of value to your process if you keep three things in mind. Number one, be intentional. Number two, be independent. And number three, be investigative. And I'll go through each one of those individually. First off is be intentional. As I mentioned, as I alluded to, if you just have any sort of TV just on in the background, it doesn't tend to be great for your brain. It doesn't really challenge you. When I think of being intentional, I remember reading something from Byron Wien, a legendary investor, years ago, talking about reading actively. And he said, you should read as much as you can, but don't just read passively. Don't just read and see what the author has to say. Have an opinion going into the book, especially a nonfiction book, right? Have an opinion, have a point of view, and then use your reading to see how the author's point of view differs from your own. I've one I can't even remember where I got this from, but someone had mentioned use your books as a notebook, not as a piece of art, right? So I've gotten used to reading nonfiction books with a red pen, and I go through and I underline things and I write in the margins, and my books look like a disaster of note taking, because for me it's a great way of just of reading actively, of reacting to what I'm reading and using it as a way to build out my own understanding, and most importantly, connecting it to other points of view, connect it to other books or other articles that I've read, other experts that I think have something that are related, because I think the best investors are the ones that find relationships that are not obvious. And so I think that's one of the things that's most important. So when you think about it, just like you would read with intention, you should be watching with intention as well. So I bring on financial media. I have a TV here in my office, and I'll bring up certain TV channels, certain YouTube channels, when I do it with a purpose. And just like reading articles, I don't tend to just read articles randomly. I put them in Pocket, I save them somewhere else, and then I set time every week to actually go through and with intention read those articles and follow through with them. Same thing with videos. I don't tend to watch a lot of stuff real time. I tend to save things, especially on YouTube, and a watch later bucket. And then at some point I will schedule time or set some time aside to actually go through those videos when I'm able to do it actively, when I'm able to focus, and when I'm able to, think about what I'm actually hearing and what I'm learning, and use it as a way to enhance my own understanding. So step one is be intentional. Don't just have it on. Have it on when you are prepared to actually consume it in a meaningful and a positive way. The second thing is be independent. Just like you would not go to a cocktail party and ask random people there, hey, what stocks do you like, and see what they say, and then go put your investment account into those names. Hopefully there would be this other part that you would do, which is called your own independent thought process, right? Your own independent investment process. I think what a lot of people do is they hear something on financial media and they take an expert's opinion as the way, right? That is what they're saying, and then you use that as the takeaway. What were they bullish or bearish on gold or bonds or the S&P or whatever they were talking about? The way you should think about it is not to draw people's opinions, but use their opinions to understand their methodology, understand how they actually arrived at an opinion, and then use that as a way to fuel your own process. So you need to think independently. The time to be looking at financial media is not before you do your own independent process, it's after. And I recently asked on Stock Charts TV, I asked a lot of our viewers, what's the first thing you look at related to the markets every morning? And I think over a third of the people answered financial television. And my answer to them is, that is definitely the wrong answer. I would not look at that first. I would certainly look at it. I think there's value in it, but it should be after you've done your own work. You do your work, you decide what you are perceiving, what information you are gathering, come to your own decision, and then use things like financial media to challenge those assumptions, to see what other people are thinking. And if you turn on the TV and you hear a lot of differing opinions from your own, try to understand how they came to those opinions and think about your own process and relate the two of them, right? So the timing of how you do it, you do this with intention, but you also do it independently, meaning have your own independent process that is separate from what you're seeing there, and use them as a way to fuel off each other. And then the third one is be investigative, which is essentially building on what I talked about with being independent. Have an independent process, but use what you're hearing not as the end. Your goal should not be to hear what people are saying and what they're thinking. Your goal should be to understand why they're thinking a certain way, and then go back and do further analysis on your own. Be an investigative journalist, digging into what you're hearing and try to get to the next level of it. What I try to do when I'm watching financial media and actually focusing, watching a really good interview, is I found the best things that I've watched are ones where I'm taking notes and jotting things down that I want to dig into later, right? I usually have a notepad and I'm taking notes on, oh, that's a great way to show something. I should think about that. Or I'd never thought about the copper to gold ratio. We're looking at real rates in that particular way. Or looking at the German Bund futures. I haven't paid attention to that. I really should think about it. I keep some notes, and then the next day when I have time, I go through them a little further. Right? So again, the goal should not be to use that as the end of your experience. Use it as a way to fuel your next day, your next effort of trying to dig into and improve your own process. Use what you're seeing and what you're hearing as a way to inspire that next level of analysis for yourself. So those are the three ways I think you can definitely use financial media in a positive way. First off is be intentional. You have a purpose. Be deliberate about why you're actually consuming that information. Second, be independent, right? Do your own independent thinking first, and then consume the financial media so you can relate the two and be an active consumer. And then third, be investigative, right? Take what you're hearing to inspire you to dig deeper. Don't take it at face value. Don't just draw on their conclusions. Use them to inspire you to dig deeper and develop your own conclusions. Thanks so much for watching from the Market Misbehavior team. Be well, be safe. Thanks again.